What's up, everybody? Good morning and welcome to another edition of your Bitcoin economic calendar. Today is Monday, October the 26th, and we had an action-packed week last week. In today's episode, we're going to be covering a lot of things, starting with Bitcoin's highest weekly close since January 2018. You heard that right. That was largely on the back of the PayPal effect, so we're also going to be talking about how the PayPal news may grow Bitcoin's exposure exponentially. And last but certainly not least, we have two very big volatile events coming up in the coming days. We have big tech earnings and we have the US election. But we're also going to talk about why the market may not crash because of those two very volatile events. Without further ado, let's get into today's analysis. Now, as always, we start with Bitcoin and we see that it had its highest weekly close since January 26th, 2018. Bitcoin closed the week at $13,045, and it was up 13.29%. Now, although there was no stimulus vote, the PayPal announcing that it would roll out support of Bitcoin to its 346 million users was enough to push Bitcoin beyond the 12K mark and again closing above $13,000 for the week. This broke trends with the equity markets, which were down for the week, and it's also soaking the air out of the room from all other sectors in crypto, namely DeFi, which we've been covering in the back for weeks. There's a lot of implications from this PayPal announcement, and there's some fascinating data here. We're going to be diving into this announcement in more detail in today's market trends section. Moving on to the S&P 500, with no new stimulus in agreement out of the US this week, the market sold off slightly, closing down 0.53% down for the week. And there's a very slim chance that there is a stimulus package reached before the elections. So it's very likely that the markets will enter wait and see mode until a new president is elected and there's more clarity around a transition and renewed stimulus conversation. Now, with some of the most widely held stocks reporting this week, namely Google, Facebook, Amazon, Microsoft, and Visa, and the US elections in 8 days' time, it's actually unlikely that the markets will become wildly volatile because a lot of volatility has already been priced into the options markets. This may sound counterintuitive, but we're going to explain. Now on to our explanation. Volatility being high means that a lot of people are paying for price insurance on their stocks. And the sellers of that insurance are pricing it higher to hedge that market risk. Now, the implications of this is that the participants that are purchasing this insurance are already hedged and they will not have to rush to the gates to sell their stocks in a down market. This is what typically causes a waterfall and a sequential leg down. And so basically when a market sees a known shock, it can hedge for it and it becomes much harder for volatility to spike after the event. This is actually reflected in the inverted volatility curve structure, which was beautifully described in a recent OddLots podcast, which we're linking to here, and that's the link of the article that you see behind me. Now, moving over to gold, we see that it had a muted week, basically, as it was up 0.14% at $1,901 per ounce, as there was no real market catalyst that was able to push it higher or lower in either direction. Like most other markets, it is likely waiting for direction after the US election and renewed conversations on stimulus. Now, moving over to the DeFi FTX index, we see that as we anticipated, the index had yet another really bad week, closing down 6.96%, and as it continues under pressure. With Bitcoin poised to perform well over the near term, it is very likely that DeFi tokens continue to be under pressure. The index has come down about 50% from its highs in the last 8 weeks, but there is still a very long way down. And just this morning, you had the news out of Harvest, which again, another prominent DeFi protocol that has been hit with a hack, and there's a lot of rumors circulating. So we'll confirm more of that when more details are known. Now, in today's market trends sections, we're going to be covering the news that seems to be on everyone's minds in the Bitcoin space, which is the PayPal announcement. Now, we heard last week that PayPal had announced that it will be support Bitcoin purchases throughout its platform users to essentially its 346 million users. To put this in perspective and why this is important, according to data from Glassnode, as of September this year, there were 31.2 million Bitcoin addresses with a non-zero balance. If you compare that to PayPal's 346 million accounts, you don't have to be a math genius to see why this is a really huge deal for Bitcoin. Bitcoin was up strongly on this news, and so was MicroStrategy stock. So these are the interesting things that we need to keep our eyes on. Now, there are a plethora of macro tailwinds forming that will likely continue to hold Bitcoin up and can push it higher in the coming months. On Thursday, Paul Tudor Jones, one of the most renowned investors in the world, went on CNBC and said that Bitcoin has a large contingent of really, really smart, sophisticated people. And he then went on to call it the best inflation hedge. That is a very powerful narrative, especially to be said in US business television, and particularly in a time when inflation is on everyone's minds. The fact is that in the last month, we had renowned micro investors disclosing portfolio allocations for Bitcoin and are recommending it on live TV. We've had publicly traded companies announcing purchases like MicroStrategy, as well as announcements to purchase that we saw out of the UK with the company called Mode. We had the United States approve the first crypto bank charter. And one of the largest fintech companies in the world is about to expose Bitcoin to over 300 million account holders. This is very powerful. While the markets in general have some uncertainty ahead, it is likely that Bitcoin continues to outperform the equity markets and gold in the near term, just given the broad set of tailwinds that we're seeing. Now, I'll close this section off by reminding you that you can earn up to 6.5% APY on your Bitcoin with our Bitcoin savings accounts. And if you need liquidity but you don't want to sell, you can always use our Bitcoin-backed loans instead of selling your precious Bitcoin. Now, on to our difficulty commentary. Not much has changed on this front since last week. We're still at 19.97 terahashes, which is our historical all-time high for difficulty. Hash rate has cooled down somewhat since the last week, and the current difficulty adjustment is expected to come in at 19.63 terahashes, which represents a small decrease of where we are now. The next adjustment is not until Friday, October 30th, but we will keep you posted through our social media channels. Now, moving on into what's ahead for the week, we see that the US election is 8 days away and there is no stimulus deal in sight. Most of the action will likely be focused on the earnings for the most widely held stocks in the US. As we mentioned earlier, Microsoft, Visa, Google, Amazon, and Facebook all report this week. And most interesting will be their guidance, basically how they address global demand concerns because of COVID. And then on the Bitcoin front, it is likely that Bitcoin continues to outperform both gold and equity given the magnitude of the PayPal tailwind over the coming week. Further, once the volatility shock of the elections is over, the attention is going to likely shift back to the US stimulus conversation, which is another big tailwind for Bitcoin. Now, as always, we will share any relevant information throughout the week through our Twitter account at HODL with Lennon, and we'll also be linking below to all the content that we had from the previous week.